So this is the wrap up for the live market open on December 17th. It's Thursday, and most importantly, the day after. The day after the Fed, we have, I hope, no hangover because things went relatively smooth. So we had an historic rate hike in the United States. Rates are now 0.25 to 0.5. That was widely expected, or as Janet Yellen said, not unanticipated. More figures. We had the dot plot, future path of rate hikes. That was left unchanged, which was relatively hawkish. Good for the US dollar. Remained at 1.4 for 2016 and 3.5 in the long term. Forecasts were basically balanced, not surprising. I think it was, she talked about confidence about the US economy. We also had confidence that the Fed is united, no dissenters. Okay, that also helped. The US dollar strengthened, then immediately retreated, but eventually markets bought the US dollar, especially in the Asian session. Yellen said they want to begin the process now, not to raise rates abruptly. Low inflation is transitory. US dollar is impacting core inflation, that's transitory. Oil prices are impacting headline inflation, that's transitory. No worries. And they don't need to see inflation reach 2% before moving again, because they did put an emphasis on inflation in general. She said monetary policy is still loose. We're still supporting the US economy. Stock markets rallied. That means it was very well received. And the US dollar is gaining strength, but nothing earth shattering. We're not seeing any sky falling. Okay, in other news, we had UK wages disappoint, and that's why the pound is vulnerable. Inflation in the Eurozone basically not exciting. Good figures from the United States on housing that might have an impact later on, but it was ignored yesterday because of the Fed. And oil prices remain on the downside yesterday. The recent blow came from inventories. There's just too much oil sloshing around, and that hurts currencies. Today we have on the agenda, just after the show, the German IFO figure, #1 think tank in Germany. No changes are expected. Let's see if it moves the euro. At 9:30 UK retail sales, this usually has a strong impact on the pound. Then we have a series of implementation tests for the Fed regarding the rate hike. The first one is at 11:45 GMT with the LIBOR fix. I think that if this goes well, the other tests, which of course are important, will be sort of looked a bit, the markets will not look at them that closely. I think the Fed has made all the preparations during 2 years for this move. They made lots of exercises, trained their staff, reverse purchasing. I think it should go well. We have jobless claims at 1:30 in the Philly Fed Index. No big changes are expected there. Of course, jobless claims is the weekly barometer. And at night we have Japan's rate decision. No changes expected there. I'm sure that the guys in Tokyo are a bit happy to see dollar yen a bit stronger today. Let's talk about currencies. Euro dollar dropped to lower ground, stronger US dollar across the board. 108.30 support, further support 107.60, 106.30, resistance 109.50, 110, and 170. Pound dollar a bit more vulnerable, 149.32, getting closer to the lows of 149, 148 further support, 150 is resistance. Dollar yen made the break back above the 122.20 level, which we talked about many times as a separator of ranges. Look how it settles nicely above this level. Still not going higher, but this line is a clear separator. Further resistance 123.60, support 121.10. Dollar CAD, the sky is the limit. We're not at the recent sky, we're a bit off the highs, but above 138. Basically, dollar CAD unstoppable after breaking 134.60 with the collapse of oil prices. Okay, I see resistance only at 140 just because it's a round number. Support at 136.20. Let's see where oil prices go. The Canadian dollar is weak. Aussie dollar, excellent technical behavior, wide range between 70 to 80, which worked superbly in recent weeks, and 71.60, I would say. 72.20 sort of the pivotal line in the range. Kiwi dollar sort of standing out with relative strength, so it didn't manage to push higher, but it's holding on to higher ground at 67. We had something I forgot to mention. We had GDP in New Zealand came out a bit better than expected, but with a small downwards revision. All in all, a-okay, no big shocks. Dollar Swiss, stronger dollar, seen also here getting closer to parity. But remember, dollar Swiss moves in tandem with euro dollar. Euro Swiss is always, almost always, in the 108 handle every morning in the show. Support 107.60, resistance at 108.40 perhaps, but I don't like it because of high intervention. Okay, we covered quite a lot. Let's see if we have some final questions before heading off.